Coming up on Over a Barrel.
If somebody complains about you not saying it perfectly word for word, you still get the idea across, we'll send them a pleasant response. By the way, if you have any complaints, send them to complaints@aol.com.
Oh, find out what's got Patrick so upset in this edition of Over a Barrel. It starts right now. Welcome to the program, Over a Barrel. I'm your co-host, Matt McClain, alongside the other co-host, Patrick DeHaan, coming to you from two totally separate states. Hello, Patrick. How are you, sir?
Good, Matt. Good to be with you. How are things down in Kentucky? Is it today?
Kentucky today. Who knows tomorrow? But for right now, yes. And things are good. It was 85 degrees here yesterday and about 55 here today. So it's normal for fall. It's the way that it rolls. I'm thankful that gas prices aren't fluctuating quite that dramatically, because that would be kind of that would be a problem, I would think, all the way around.
Nobody likes prices bouncing around too much, especially since we're getting a little closer to Thanksgiving.
Hey, one thing that I do want to talk about very quickly, are we getting closer to my $1.99 dream price on anything? I mean, 99 cents. Where do we stand with all of this? Before we even get into the meat and potatoes of the episode, where are we right now?
Oh my goodness, you're going to make me talk about 99 or $1.99 gas when
Absolutely.
what was a couple weeks.
I begged you.
Yeah, you did. Well, you know what? I'll have a development on that for a minute. But right now, Matt, the national average has continued to drop 7 straight weeks. I feel like a broken record because I think last week I said 6, and the week before that I said 5.
I'm okay with a broken record. Maybe next week we'll make 8.
Yeah, I think we will. The national average is to $3.38 a gallon today. Now, it has paused here. It hasn't gone down a whole lot from a week ago, 4 cents in the last week. There are some states that did jump up a little bit. So Florida, Indiana, Ohio, Michigan, I think jumped up the week prior. All those states, Matt, saw a jump. We call those price cycles because when stations start to sell at or below cost, they jump prices up. And then as soon as prices go up, they go back down. It takes a week or two, then they go back up. That's a cycle, right? When they constantly are going up and down. So that's why the national average hasn't gone down a whole lot in the last week, because those 3 states, Florida is a big one with all the people down there. Florida saw prices go up. And if I quickly pull up the statewide average for Florida, yeah, it's up about 5 cents from a week ago. And so that's kind of holding the national average, preventing it from declining. But because Florida went up earlier this week, it's going to start cycling back down. So,
gotcha.
Yeah, a lot going on. But a development on that 90 or the $1.99 gas. It was $1.99, right? Okay.
Yeah, well, I mean, I'll take 99 cents, but I think realistically, I would jump for joy at $1.99 at this point.
Well, there was an interesting thing happened that drew my attention over the course of the weekend. Mm-hmm. Now, which do you think happened, Matt? What do you think I'm about to say?
Gas prices are inching closer to the $1.99 mark in some states, somewhere in the United States of America.
Now, what I'm going to say is we actually saw a gas station that lacked a first digit.
What?
We saw a station, yes, Longmont, Colorado, last week, Friday.
Was it a mistake?
99 cents a gallon. It was not a mistake. Hundreds of cars waiting in line. David Baxter from Colorado tagged me at a link. By the way, if you ever want me to see the price war, hashtag or I should say mention me at Gas Buddy Guy in your post. But yeah, David stumbled upon a station in his backyard. I see the picture here. It was a Phillips 66, 99 cents a gallon, but the price of diesel was $3.55. So it was a price war. We've talked about these 2 stations across the street from each other, a little bit of bad blood, Matt, and they went all the way down to 99 cents a gallon.
That had to have been at a loss for sales, I would think. There's no way that they're making profit off that, I wouldn't.
Oh, they're losing. They're losing hand over fist. But again, bad blood here. Stations are, people are very price sensitive. You and I always talk about the lowest gas prices. And if one station... Some stations, Matt, by the way, they decide this, is some stations are always going to say, I want to be 2 cents lower than the guy down the street. The guy down the street gets sick of that because he's always getting undercut. And that's where the price wars start to spiral out of control, because it's just tit for tat. And Matt, imagine being a station owner and your competition always has a lower price than you. It gets old. And that's why these price wars can develop.
Well, what is the, I guess you've given us the artificially low cheap price, which 99 cents a gallon, that technically meets
that's
that
artificially
threshold.
low. That's artificially low. It's
If you had prepared me, I would have had music ready for a celebration and I would have started dancing out in the middle of the streets. But the fact of the matter is, more realistically speaking, what other cheaper prices are you seeing that's a little bit more sustainable, I would assume?
Those non-loss leader prices, right? Where they're selling at a profit, but they're low. Well, let me highlight the market first by Matt saying there are 40 states now where you can find at least one station at $2.99 a gallon or less. 40 states, so that means only 10. And those 10, I'll quick highlight the unlucky 10 where there are no $2.99 prices yet. Montana, cheapest price there, $3.19.
That surprises me.
Idaho, $3.35 is the cheapest price. Alaska, the cheapest price, $3.59. Oregon, $3.49. Nevada, $3.49. Washington, $3.45. California, $3.89. And Matt, there's one state that has not a single station below $4.
Wait. Let me guess, because I've been there. I bet you anything it is sitting in the middle of the Pacific Ocean and it's entitled Hawaii.
You are correct.
Not shocked.
You are correct. Yeah. Hawaii's cheapest price today, take a guess. It's over $4.
Oh, Lord. Probably the cheapest.
Drum roll, please.
The cheapest I would probably take a guess at Hawaii would probably be about $4.10 to $4.20 a gallon.
Wow, you are good, Matt. It's $4.08 a gallon. So it's getting close. But, to the other side of the spectrum again, because the 40 states, as we mentioned, we just talked about the 10 that don't have any sub $3 prices. The cheapest price today is still in Colorado. By the way, I just mentioned 99-cent gas was in Colorado. The lowest price in Colorado, $2.14 a gallon. They're probably losing a little bit of money there, so I'm going to caveat that. But beyond that, Matt, if I go down the cheapest station in every state, the cheapest states, so the cheapest station in the cheapest state, Texas, $2.33 a gallon. Georgia, $2.31 a gallon. Oklahoma, $2.29. So these are the cheapest prices in the cheapest state. So this is as good as it gets, right? And like I said, Texas, $2.33, Mississippi, $2.48, Georgia, $2.31, Oklahoma, $2.29. South Carolina, $2.48, Louisiana, $2.45. So, Matt, the lowest prices are getting into the low twos now, which is rather incredible. And you compare that to the national average, which is still almost $1 a gallon more than those prices we just mentioned at about $3.38.
You've been laughing at me all year every time I bring up $1.99 or 99 cents.
I didn't think that was going to happen. That was.
I'm just going to take a victory lap right now and say I told you so.
That's a heck of a victory lap, by the way. And by the way, I'm going to take a victory lap, or at least caveat your victory lap and say that was an artificially low price. So that doesn't count because, Matt, just like that one station in what is it, LA, that's still $7.79 a gallon.
Good gravy.
That cannot be used as a fair representation of the gas prices that are happening in the country.
No, but $2.29 in Oklahoma certainly can.
That can be. They're not making much, but
$2.31 in Georgia, $2.33 in Texas. I mean, those all kind of make sense. I mean, I would love to have that. Kentucky, I don't know where it's probably about $2.50, I would think, because I think here locally where I'm at, I'm paying about $2.85.
Look at you. You're spot on. I think you have a cheat sheet there because Kentucky's cheapest price isn't the $2.50s. It's $2.54.
Well, that I don't have. I did not pull that one up. But yes, I actually don't have that.
That was a great guess then.
Rough guess. Yeah, because I'm paying about $2.85. And usually there are places that are cheaper in Kentucky than where I'm located by about 25 to 30 cents. And that's a fairly consistent price differential between where I'm at and where those cheaper gas stations are in the States.
By the way, breaking news just happened in Pennsylvania. What happened? The first station in Pennsylvania just fell below $3 a gallon. Let's give a plug out here. The station is Turkey Hill, just fell to $2.99 a gallon. I have no idea how to pronounce this town name in Pennsylvania, but it's a town in between Lancaster and Reading. I think I have that right too, Reading, Pennsylvania, even though it reads as Reading.
Reading? Yeah, I think it's Reading as well.
So just happened, $2.99, Matt, and that's now the 40th state where you can find at least one station at $2.99 a gallon or less. So, hey.
Well, that makes, I'm not going to lie, that makes me very happy because, Thanksgiving's just a few weeks away. And I'm very excited about the fact that hopefully I can, make my holiday driving at, sub $5 a gallon like we had a year or two ago, because that was a very sad turkey day in my mind. I'm like, this is depressing. I'm paying more for the gas just to get to family than I am for the actual, meal.
You mean, yeah, paying more for the gas than the turkey. But
right?
As we sit here and talk about that, the declines will continue into Thanksgiving, Matt. So, more good news is that, hey, why stop at 7 to your point? Let's keep it going 8, 9, maybe 10. Looking at the price of oil, Matt, by the way, so last time we talked, we are down into the 70s rather impressively, which is huge because, we talked about this, I think last week, Department of Energy, the Strategic Petroleum Reserve, the magic number was that they were going to start buying oil under $79 a barrel. Today, as we sit here, Matt, we have fallen to $75.54 a barrel.
So they're apparently buying, I'm assuming.
I'm really hoping so. Now, the Department of Energy works in, it's government, right? It never works as quick or as efficient as you want. So they have active solicitations. That means that they are soliciting oil companies to sell them oil at that price. And hopefully with $75 oil happening, hopefully some oil companies are saying, hey, yeah, we'll fill the SPR up. So we'll have to see. The details probably will take a couple of weeks, Matt. Contracts don't happen overnight. There's a lot of process there, but I'm hopeful that the Department of Energy is putting a lot more oil or thinking about putting a lot more oil in very quickly right now that they hit that magical price.
Yeah, definitely. Well, we can certainly hope so for definitely for sure. So we obviously don't get too terribly geopolitical. We do want to point that out. There was a presidential debate for one of the two major political parties in the past couple of days.
Oh, the Republicans had a...
Yes, yeah. And you're right. They did. And they spent quite a bit of time talking about oil prices, gas prices at the pump. And in the back of my mind during the whole time, now we can maybe get into this a little bit more in depth in a future podcast. But for right now, I'll just simply say they all seem to be experts, quote, experts, unquote, on the price of oil and gasoline at the pump. And each one was very confident in their answer of, well, here's how you get it cheaper. And every single one of them, basically were all indicating that they wanted to make sure that you talked about, not you, but basically talking about gas prices. And it's like, well, we just simply need more oil, more oil. More oil, more oil, more oil. And
more
in the back
drilling,
of my mind,
more oil, right?
Yeah. And in the back of my mind, I'm like, that's not what Patrick says. Patrick says it's a refinery issue, not so much of the fact that we need technically more oil. Now, I'm simplifying that, but I mean, what's your answer to all of that?
Well,
and I'm paraphrasing. There were 5 candidates on the stage. I'm paraphrasing. I'm not giving quote for quote because there were 5 different answers. But
if somebody complains about you not saying it perfectly word for word, that you still got the idea across, we'll send them a pleasant response. By the way, if you have any complaints, send them to complaints@aol.com.
Oh,
well, now somebody's going to email them, but. Yeah, which I'd love to get a bounce. To your point, Matt, there is a big issue. I mean, you could theoretically bring on more oil is going to simply, potentially lower prices. More oil in the face of OPEC cutting production isn't going to do as much. So there's that. But you could have more oil. More oil is not going to hurt. It will drive the price down, but there is an additional choke point that has to be considered. You can have all the oil in the world, but if there's not enough refineries to refine it, Matt, we've talked about this, the problem can be refineries. That's the choke point. You can't build a bigger hose right at the end of the hose where water's coming out of. You can't get more water at the end than you're putting in. That's the problem that can be solved by building more refineries or incentivizing them to build more. But it's also going to be hard to get refineries to expand because they see that there's transition to EVs happening in the background, and they're going to say, why am I going to expand my refinery? It's going to cost me billions of dollars, and Americans aren't driving as much anymore. So from the economics perspective, oil companies may balk a little bit. But I will say that refineries, especially in the Gulf states, Matt, can look well beyond just the U.S., right, for demand. They can sell, and they do sell, gasoline in Central and South America. They sell diesel to Central and South America.
Right.
And so U.S. refineries still have the capacity, even if U.S. drivers don't drive as much in the years ahead, they still have the South American market. And of course, when you're second or third world country, or first world, everyone's moving to EVs at a different pace. But in Central America, where incomes are not what they are in the United States, that transition is not going to be happening nearly as quickly. So what I'm saying is they're still going to need fossil fuels, petroleum, gasoline, diesel, and oil, and all these things in Central and South America. And so refineries still could expand here. And if the Americans that, buy gasoline today don't tomorrow, refineries in the Gulf states can just ship it down to Central and South America or other places in the world as well. So, you bring a strong point. So, the Republican answer, yes, more oil is not going to hurt. It will help. But, in spring, when refineries are doing maintenance, we still need more refineries too.
No, absolutely. I'm confused when I look at politics, and I guess most Americans are, so I don't feel totally left out. But you have one political party advocating for EVs, and then you have a different political party advocating for more oil drilling. Then you have
by the way, I love how you dance around this. I think we're all familiar with what political.
Yes,
I appreciate you trying to be partial and not pointing out, because I realize that we could go down a whole nother rabbit hole.
It's kind of that news reporter in me, that unbiased, like, here we are, a type of a thing.
I for one appreciate that. Politics is so divisive already.
Well, and for full disclosure, even like, for example, when I anchored news in Florida, they allowed a person to be a no party affiliation. That's how I was always registered as a voter in Florida. Some states don't allow for that.
I appreciate that, because I've had enough. Everyone's had enough of politics, or all you do is live politics. So it just gets a little old. But anyway.
So my general thought is, if I'm going to talk about it, I don't sit there and angle a personal position one way or another in that regard as well. But it's very confusing to me that you have one political party talking about EVs, you have another political party talking about we need to drill more oil, then you have the auto manufacturers saying, well, starting on this date, we're going to basically produce only electric vehicles. I'm looking at the whole market there, and I'm so confused on where this goes between now and 10 years from now. What are your thoughts on all of that?
Yeah, Matt, appreciate that's a great question. And by the way, you segued into this perfectly. The auto manufacturers, by the way, are cutting back on EV production. If you saw this,
I did.
The headline: Ford cuts EV investment after losing $36,000 on every EV sold in the third quarter of this year. Ford posted a and I'm taking the words out. So if you know this headline, feel free, but I have it here in front of me that Ford posted a $1.3 billion loss in the third quarter. And the Ford EV unit said that they were going to cut Mustang Mach-E production and delay building a battery plant. So
that battery plant was actually going to be built in Kentucky. They had
where in Kentucky?
In the west central part of the state, and then they also have basically a sister plant in Tennessee, and they've put a hold on a second one being built there. So they've got one in each location. They were going for two identically of the same plants in both Kentucky and in Tennessee as well, but. They've put a hold basically on 50% of the capacity that they were going to be constructing.
Well, to the point about this, the speed of this transition can be very confusing, right? We're all navigating it. Nobody really knows, Matt. There's not anyone in the world will know how quickly this is going to happen. This is the game that everyone's trying to figure out. I'm trying to figure it out because an analyst, it affects me and how much gasoline is going to be consumed. But Matt, I'm fascinated by how consumers are reacting to this because, I'm a consumer too. I was looking at potentially an EV, but I have to admit that, I think the perfect world, at least for me, everyone's going to have their own opinion, is, Matt, I would love, and I live in a big city, so it's also going to be different for you because you live in an area that is large. It's a city, but not as large as a city. So
I've literally lived in both
gridlock.
areas. Yeah, I've lived in Chicago, I've lived in Tampa, lived in St. Louis and other places, and I've lived
Tampa
in
traffic.
Right? Oh yeah, Malfunction Junction. If you are familiar with the Tampa traffic, that's in downtown I-4 and I-275. It is horrendous. They've tried to fix it. It's still bad. But my point is that I've lived in both experiences, both rural and urban, and yes, it's a very different mindset all the way around.
Yeah, so owning an EV in a big city might make a lot of sense, and I think the perfect world, and Toyota, I think, it's been real popular for the U.S. automakers to jump into this EV bed, right, and start just mass producing them because politicians are, the tax dollars are just all over. It's just like some money truck just blew up and there's just bills floating all over the air, right? That's the government right now, and how they're treating EVs is handouts left and right. So what I was going to say though is, as tempting as getting an EV is, there are some. Everything has a pro and con. Gasoline does, EV does, whatever. Hydrogen, liquefied natural gas. Every one of these has pros and cons. The downfall to a battery, Matt, is that when I'm on long trips, which arguably are not very often, I still don't want to. I mean, the grid isn't there, right? The charging stations aren't there. There are huge lines, right? People have been posting, maybe incorrectly, right, that they have encountered lines at Tesla supercharging stations. So yeah, that can all change. But the problem is, I'd like an electric vehicle for my daily, if I have to go get a haircut or go to the store. The problem is, a lot of manufacturers, I was kind of disappointed that Mazda, they have a CX-90 plug-in electric vehicle, right? The PHEV. The range on it is 40 miles. 40 miles. Now, in the Chicago metro area, I can easily drive 40 miles, 30 to 40 miles one way.
Yeah.
I think the problem with a lot of these hybrids, Matt, is the range, right? 40 miles, and arguably in Kentucky where you are, you might not drive 40 miles, but your market is smaller than a city like Chicago where we have to drive 30 or 40 miles sometimes to get to where we need to go. The perfect plug-in hybrid electric would be a range of like 100 or 200 miles, right? It's kind of like a really short road trip. And then for anything above a 200-mile range, a gas engine would kick in, right?
Right.
Because then most of your daily tasks are going to be electric, and you don't have to worry about the grid as much either. But then the fail safe is you still have a gasoline powered engine to, I don't care whether you have a gasoline engine in the vehicle or if the gasoline engine's powering batteries. It doesn't really matter. And I think that's what's so interesting about Toyota, because Toyota has using itself and just mass producing EVs. First of all, they're doing a lot of studies, and I think Honda as well, on Toyota, solid state batteries. Mm-hmm. But I think where a lot of manufacturers are getting it wrong is in the range of these electric vehicles. Like, right, the Chevy Bolt, what did that have, a 25-mile radius?
Yeah, it wasn't much.
So, now that's my take as a consumer. I'd be interested in hearing your take. Do you agree with me? Do you disagree?
I think a couple of things with regard to EVs. I know that, for example, if you live in a rural area, sometimes the nearest grocery store may be 30 minutes to an hour away. And if your car runs out of juice, you may be staring at trees, not even a home that you can walk up to and say, could I use your phone? And you have no cell phone reception.
Very true.
So that becomes a problem. You also have sporadic power outages in greater number in rural areas due to storms, winter storms, summer storms, spring storms, high winds. Because you have more exposed electric lines on poles instead of in urban areas where a lot of them are buried utilities and a lot more reliable.
And look at California, even a big state like California, that's a concern.
Well,
right?
And not only that, Patrick, but I also look at the idea of, like, for example, the power grid in Texas, which is quite literally an island unto its own. They manage their own power grid. For sure. And then you have rolling blackouts without the demand of an entire population having nothing but EV vehicles that need power in order to operate, need to be using electricity to charge themselves. You have power issues out west. Sometimes even here in the summer, you will have, power issues across Missouri and Illinois. And that is without the extra strain that all homes having an electric powered vehicle plugged into the wall. I've got to be really, I'm going to be really blunt. I'm uncomfortable doing it because I'm that reporter who never takes an opinion, but I'm going to be really blunt. I think it's a dumb idea without having some sort of a backup built into the vehicle of something. Be it an extra battery that's never tapped unless it's an emergency.
Well, look at Florida, right? A major hurricane, right? We've mentioned that. A major hurricane throws out your solar panels are suddenly like in somebody else's backyard. The grid is a mess and you need to get things moving. You know, I think the answer to the future, Matt, for me, like to your point, I think going 100% gasoline, there are cons to that. There's a con to going to 100% electric and just somewhere in the middle, right? Toyota's been ahead of this on hybrids. I'm preaching.
Yeah,
you're right.
I just don't think our power grid can, I don't think that they can build out the power grid to handle that so quickly. I think that becomes a problem. You have winter storms, ice storms, tornadoes that can literally destroy the infrastructure just like a hurricane. And then you're out of luck for days or weeks. Well, generators will run on gasoline. Vehicles can currently run on gasoline, but if everything is power supplied, electric, and that infrastructure has been decimated by a disaster of some sort, what are you supposed to do? Call your boss and say, sorry, man, I can't make it into work today. My vehicle's dead. I mean, you run into a serious issue at that point. I don't know the right exact answer, but I don't believe the full answer is 100% electric vehicles for a good bulk of the nation. I think that's a problem.
Well, you know what, Matt, kind of that adage, you know, I don't know that, I don't know that everyone's got all the right answers, right? And I don't know if that electric is all the right answer either. So, off our soapbox a little bit, it is kind of interesting exploring the EV part of this conversation. It's something that we'll be doing more down the road as this transition accelerates. I do want to touch on something else that rubs up on this, potentially the transition to EVs, but some interesting data I've been watching this week. Gas Buddy has demand data for gasoline, right? We've talked about the Pay with Gas Buddy card that you and I both have. And looking at that data, it's signaling something to us. And something stuck out to me this morning when I looked at yesterday's gasoline demand. Wednesday's gasoline demand dropped 9% from what it was last Wednesday, right? So comparing this Wednesday to last Wednesday, because you always have to compare days because there is a lot of behavioral stuff that happens on the same day. Friday is always the busiest day, for example. So you can't compare a Monday to a Friday. But Wednesday gasoline demand was down 9% from last Wednesday. And it was also down almost 6% from the average of the last 4 Wednesdays. So something's happening here. Some of this could be the transition to EVs, but that is not usually going to stick out from this week to last week, right? It's not like 100,000 people just jumped into Teslas and don't need gas. So I've gotten a lot of questions on, hey, what does this mean? Well, when gasoline demand suddenly plummets, it can be worrisome. Why? Because a strong economy, Matt, you don't suddenly stop buying gasoline, you buy more. Right. Because you have, you might have a job, you may be feeling better, you have more money to spend. And a lot of that activity happens with gasoline or diesel and jet fuel. So the fact that gasoline demand is suddenly, notably down, this is something to watch. I will say, though, that you don't look at just one day and compare it to another day, right? The broader context of weekly demand is really important. But I will mention that so far this week, Sunday through Wednesday, because Gas Buddy's data we look at a week as Sunday through Saturday. And since we're halfway through the week, Sunday through Wednesday gasoline demand this week is down over 5% from last week. And it's also down over 4% from the 4-week average for Sunday through Wednesday. So something's cooking here. It could be a little worrisome. It could be more than just seasonality. It is normal to see gasoline demand falling, right? We said that last week. But this could also entail maybe a broader economic slowdown, right? That we've been talking about. The Fed has been talking about this soft landing. We saw some rough economic data in the last couple of weeks, right? And now FedEx, I think, is based in Tennessee. Maybe you heard that FedEx is letting a lot of pilots go.
Yeah, they offered a one-time buyout if they retired early. It was a very large amount of money.
Well, and they also tried to steal some of their pilots to American, right? And American Airlines American Airlines regional carrier, PSA, was offering them, and I guess I'm in the wrong job, Matt, because they were offering these pilots a sign-on bonus of $250,000.
Yeah.
But, back to the economic concern there.
Both of us have dabbled into being pilots. I've got my drone pilot's license now. You've kind of worked on being even flying a helicopter, if I remember correctly.
I do. Yeah. I was just thinking about, I was actually Googling, getting just a private pilot's license too, because I do love flying. But maybe there's something there.
Maybe you and I should, that's what we'll do. We'll fly for the podcast. It'll be great.
There you go. But, it's really interesting seeing those gasoline demand numbers because, again, broader economy. Now we're talking about FedEx, but the FedEx layoffs, Matt, are concerning because that means that there's not as much cargo flying, which means Americans aren't spending as much, which means, it just dovetails. And so gasoline demand can also be a big economic barometer.
You mentioned economic barometer. I want to bring up a couple of things very quickly. Federal Reserve Chairman Jay Powell has warned against being misled, and that's in quotes, by good data or data, depending upon who you are and how you want to pronounce it, on prices, saying basically the U.S. Central Bank's 2% target has a, quote, long way to go, unquote, hinting at additional rate hikes as a possibility. I remember you talking about how that can also impact prices. Then we also have a little bit of a developing story, and that is that ransomware, a ransomware attack has disrupted the U.S. Treasury market. I honestly would not have thought about ransomware. I would have thought that the Treasury and oil prices and stock markets and all of that would be quite secure.
Well, nobody's bulletproof. Remember the Colonial Pipeline outage, right?
You're exactly right. So the question mark that I have is if the rates are increased interest-wise, what that seems like that would almost possibly put a halt to the falling gas prices. Am I wrong? If they raise the interest rate again?
Yeah, no. If they raise the interest rate again, Matt, that's going to throttle the economy back even more. And
so you think that the price of gas would actually go down?
Yes, raising interest rates would put downward pressure on gasoline prices because it's going to stall the economy. Technically, right? The more interest rates go up, the more the Fed is exerting its control to slow the economy down, right? That's what the Fed is trying to do. It's raising interest rates because things are superheated. Inflation's just running away. The only way to slow that down, Matt, is to make borrowing more expensive, which slows down mergers and acquisitions, which slows down businesses from growing. But that also, in turn, then slows down inflation at the grocery store, inflation at the car manufacturer. It slows down inflation left and right. Like look at the housing market, right? Things are slowing down there. So the only way you can throttle back growth and maintain inflation is by using this overnight Fed's fund rate. So the more expensive you make it to borrow, the less people and Americans. I mean, the American economy relies on borrowing, right? So if you make it more expensive to borrow, Matt, less people are probably going to do it. And then less people are going to have money to spend. So actually raising interest rates has an inverse reaction on gas prices. The higher inflation goes, the more downward pressure it puts on not only gas prices, but other commodities too.
And that's an important point to make because the lower the cost of shipping becomes, in theory, that should also eventually trickle to a lower price for commodities, be it clothing, groceries, or whatever, on the grocery store shelf. I will admit that to some degree, groceries can, in theory, fall a little bit faster in prices. And again, that is to some degree because, and I'm not going to go into every single layer here, but the reality is, whenever a beef or pork or whatever the case may be is brought to the attention and the price point that those animals are sold at, also factor in how much gas was while they were being bred for food. So it does take a little bit of time. But yeah, I mean, in theory, that should bring the price down all the way around. You would think that the Federal Reserve, I guess it's technically out of their purview and out of their expertise, but you would think that they would say, we need to work on bringing oil prices down. We need to work on the other aspects because in my mind, that would tame inflation even more because it would bring the cost of most things down.
Yeah, it absolutely would. And that's why they're chasing this so much is because, Matt, if you lower the price of, if you slow the economy down, People aren't going to be buying as much, spending as much. And, it's, to your point, trickle down, right? If the cost of diesel goes down, the farmer doesn't have as high of a cost of moving the livestock. If the cost of livestock goes down, or I should say, or crops as well. And if the price of crops goes down, then the feed that the animals that produce meat are eating is less. And the diesel to get that to market is less. It dovetails. And so, the more the Fed raises interest rates, the more it cools off the economy, and thus it does risk a recession, right? If you exert too much pressure and make the cost of borrowing too high, right, it could become problematic on the other side, which may not be necessarily the worst thing, right? Is when you overheat, you might have to underheat
there are some and there are some things to also keep into factoring in. Businesses, a lot of the times, if they have debt, it is not on a fixed interest rate. So every time it comes up to be basically readjusted, sometimes annually, sometimes it's locked in for 3 years, whatever the case may be. All of a sudden, you have a jolt in an interest rate on your debt that you're servicing as a business. Then you also have homeowners and business owners, property owners in general. It used to be almost 0% to go finance a house,
right.
1-2%. Now it's 7 to 8%. And that is a large difference when you're buying a $1 to $300,000 or $400,000 home, depending upon where you are. And that's just average, depending upon where you are in this country. That could be huge. And that I would think would bring a serious issue into play.
Yeah, absolutely. It's going to be really interesting to see this dynamic. And I mean, to your point, Matt, I was talking to my friend. My friend is buying a house that, is roughly, it's out in the suburbs of Chicago where the home prices are much more affordable. Still maybe not affordable, but the interest rate out there and what he's paying is essentially going to be the same as what I paid for a house in the city 5 years ago. So talk about a massive jump in borrowing costs.
To me, that's going to create what I would consider a localized recession in certain professions.
Yes. Yep.
And that's where I get a little concerned. The housing market, for example, there's a lot of things that can be impacted by that. Construction workers, building new homes, obviously real estate agents and other aspects. But there's a lot of things that are tied to that, which can have what you would basically consider a limited recession or a localized recession within the economy in certain professions.
Yeah, exactly. So, so some areas of the economy may get hit harder, but this whole dynamic, gasoline demand, the Fed, interest rates, all ties into what we pay at the pump in one way or another, right? People want to say a president has control over all of that, but, really the other thing too, Matt, is that the Federal Reserve is really in charge of this monetary policy. And the interesting thing about the Fed is Jerome Powell has been there. He was actually appointed by President Trump. So the Fed is independent in its mission. Its mission is to tame inflation, to make sure that inflation is acceptable. So, the other thing I've been hearing a lot about, is this runaway inflation? Well, the Fed controls inflation. That is the Federal Reserve. And the guy that Trump put there is the chairman. So, they are an independent body. Right. They're operating in the way that will slow inflation back down because nobody likes this. But the good news is on the inflation front, Matt, is that gas prices, are getting back to where a lot of Americans feel like they're normal. Right. We're nine states now where prices are back below $3.
But I'm kind of depressed that normal seems like $3 a gallon, too, but I also understand.
Yeah, normal at the grocery store. I can still remember buying 2 liters of Coca-Cola or Pepsi or actually Mountain Dew for like 79 to 99 cents. Yep. And now it's like $2.99. So, part of that is just having to realize that in addition to paying more for that 2 liter, that I'm also getting paid more than I was, 15, 20 years ago when that happened. Quite a bit more, actually. So,
well, and then you also have shrinkflation as well. I mean, you can still buy 2 liters, but a lot of the times it's now a liter. Have you noticed that? Have you noticed?
I mean, they try and stick you on a liter, but that's
Sure.
the beauty about those tried and tested and true sizes, Matt, is Americans get so familiar with a gallon of milk, a dozen eggs. There are units you can change. That box of cereal or that chip bag of chips, right? There's no standardized units over time. So
a family-sized bag of chips is almost one of the size that you get out of the vending machine now. It's a slight exaggeration. But one thing that did get me, toothpaste. I won't give the exact brand. It's obviously one that everyone's familiar with.
I remember you saying that. Yeah.
And now I can fit a full, because you have like the travel size you can put on your carry-on, under a certain amount of ounces. Well, now the toothpaste that I had been buying that was, a year ago, 5 ounces, 6 ounces in the tube is now 2.7 ounces. It's now about 0.4 ounces less than what is required to be able to fit onto my carry-on. So I don't need a travel size anymore. But the problem
whole thing is just disgusting.
But think about it, though. The price of that tube of toothpaste is now more expensive at 2.7 ounces than what I was paying for 5 ounces.
Yeah, so you got hit twice.
That's right. I'm getting less product, and I'm paying more for that less product than I did for a full 5 ounces. But that's one example. There's a whole bunch of things like that on the store shelf.
And last week when we talked about half gallons, remember, if they ever change the unit of measurement, you can't change that unit of measurement. There's so much would have to change behind the scenes. And this is what I do know as somebody that works for a company, PDI Technologies, serves the convenience store industry all up and down. And moving to a half gallon would just be so challenging on many different levels. And speaking of gasoline again, Matt, before we get too hung up on inflation and EVs, I will say that by the end of this weekend, we're going to have at least 2 more states joining the 9 states with average gas prices below $3 a gallon. And you might be familiar with this one because it's Kentucky and the other's Delaware. So
I'll take it.
That will put us up to 11, and that could happen here by this weekend and early next week. 2 more may join. Missouri and North Carolina are next up after those. So, by this time next week, Matt, we could have 13 states below $3 a gallon. And by the way, that number is going to keep going up. So wonderful news here as we close this episode. And by the way,
absolutely.
Appreciate all the emails and information our followers have been following us, and a little bit more in depth here before we start closing is that social media, you can find us over a barrel on Facebook. I'm on Threads too, Matt, by the way. Gas Buddy Guy on Threads. So I know there's been a big uptake on Threads. I'm over there at Gas Buddy Guy on X or Twitter as well. Over a Barrel Show on Facebook. We're Over a Barrel Show on X as well. And you're Over a Barrel, Matt, and you're on X as well. So
I'm on X. I've got a public page on Facebook. Just look for Matt McLean, et cetera, et cetera. We're all there.
Yeah, we are. And we'd love to hear, by the way, as we get more and more of these low prices, throw us a mention out. Tag me or Matt. We'd love to feature your low prices. But for this week, Matt, we're going to be back next week with some information on hitting the road for Thanksgiving. So thanks for tuning in, and we'll talk to everyone soon.
Have a good one.